Hi everyone, welcome to another video on MCQs. This one is again on income tax. Now the question is, a house was purchased on 4th of January 2011. So 2011 is the date of purchase. For rupees 9 lakhs. So what is 9 lakhs? 9 lakhs is the cost of purchase. It was used for business. The house was used for business. It was sold on 1st of April 2021 for rupees 50 lakhs. So everybody, the date of purchase is in 2011. The date of purchase is in 2011 and the date of sale is 1st of April 2021. Now the question says the profit on sale will be. So they have already given us the selling price, which is 50 lakhs and the cost, which is 9 lakhs. Now, if you read the options very well, they are not asking you to calculate the capital gains. In the options, they have not given you any amounts. So they are not asking the amount of capital gains. They are just asking the nature of the profit. Whether the profit would be short-term capital gain, long-term capital gain, or none of the above. Now see, something which was purchased in 2011, actually I should not say something, I should specify the asset. So I would specify the asset, which is house, correct? Now it was purchased in 2011, but it was sold on 1st April 21. Now what do you think? 2011 to 2021, there was a profit. What do you think? Whether it would be short term or long term? You know what? The answer is going to be short-term capital gain. Now there are some students who would be shocked. They would be thinking, sir, how can something which is purchased in 2011 and sold in 21 become short-term? Because you might be thinking anything about 2 years, because house is an immovable property, right? So for immovable property, anything which is about 2 years should be long-term. Then sir, why are you saying short-term capital gain? Now, here comes the most important explanation of these MCQs, and it is that it was used for business. Dear friends, whenever an asset becomes a business asset, or I should say, whenever an asset becomes a depreciable and a business asset. Now, the rule is for depreciable assets, whenever there is a sale, or you can say whenever there is a profit, the answer is going to be always short-term capital gain. For those who have not yet understood, I would give a further more explanation. See, assets can be depreciable assets. If these depreciable assets are sold, then there is going to be a capital gain. Now, assets can be non-depreciable assets. Non-depreciable means assets on which you don't claim depreciation. If these are sold, then there can be a capital gain. But you know what? There is a difference in the nature of capital gain in both of them. Whenever you sell a depreciable asset, do you remember while calculating depreciation, you follow this format: opening WDV, add purchases, less sales. Now, sometimes what happens is, in the final answer, you get a capital gain or a capital loss. Now, for depreciable assets, the rule is the rule is, whenever you get capital gain or capital loss, it has to be always short term. For non-depreciable assets, my dear friends, we do full value of consideration, transfer expenses, and then we calculate everything. Over here, the answer can be short term or it can also be long term. So my dear friends, whenever in examination you get that a depreciable asset was sold, see, in this question, if you see very carefully, it is talking about a house. Okay, now it says it was used for business. Now, if a house was used for business, then it becomes a depreciable asset. It is like a building, correct? So building is a depreciable asset. And when you sell a depreciable asset and you get a profit, so in case of depreciable assets, whenever you get a profit, the profit or loss will always be short term. You do not have to count 2 years, 3 years, 1 year as far as this depreciable asset is concerned. The concept of 1 year, 2 year, 3 years should be applicable only when we are dealing with non-depreciable assets. Sir, can you give us some examples of non-depreciable assets? Yeah, definitely. Non-depreciable asset is like land. Non-depreciable assets is like jewelry. Non-depreciable asset is like personal house. Personal, huh? I'm not talking about business. I'm talking about personal house. So, in short, because this was a depreciable asset, because it was used in the business and there was a profit, you do not have to check 1 year, 2 year, 3 year, and the answer will always be short-term capital gain. So, this is a very important MCQ for your examinations. All the best. Bye bye. Thank you.